All right, welcome to the third video of this bootcamp series of the playbook, going over this blueprint, this guide for all traders, whether you're a beginner, intermediate, advanced. This applies to any asset pair, any market, and this is a system that you can use to leverage, a system that you can use to for you as a trader to elevate your trading game to the next level. This playbook, this strategy has helped me to give me direction, guidance, and clarity. Now, today we'll be going over breakup structure and retest. Now, before we dive into it, let's define what is breakup structure. A breakup structure happens when price breaks past a previous high or low, signaling a possible shift in market direction. For example, when you see an uptrend happening, if price breaks above the last higher high, it confirms a continuation of a bullish structure to the upside. If it's a downtrend, in a downtrend, if price breaks below the last lower low, that leads to a contribution, a continuation, I'm sorry, uh, a continuation of a bearish structure. So let's see here. Let's go ahead and define and spot the differences. And a breakup structure shows that order flow is strong and the market is likely to continue in that direction. Now let's look at a breakup structure before we dive into the retest. Now the breakup structure, how can you spot a breakup structure? Now here, looking at the US dollar index, we see that the dollar, it's on a downtrend. Now we see here a lower low. This is a higher high. Lower high, lower high, lower high. And we went over higher highs and higher lows, lower lows and lower highs on the first video when we went over market direction. So if you guys haven't checked out the first video, I highly recommend you guys start with the first video of this bootcamp series. Do not skip ahead or else you will be confused. Now go over the first video before you dive into the rest of the steps. Look at the first video. We went over market direction. We went over higher highs and higher lows on a 4-hour time frame. Now here on the 1 hour, you can also spot higher highs and higher lows. I can actually go over to the 4-hour time frame just for this for the sake of this example. We can look at the 4-hour time frame and spot the lower highs in the market. And here, price eventually created a higher high because it broke above the structure here. Here, it broke above this lower high and it created a higher high. So this is an example of a breakout structure. Price failed to create another lower high, and instead it broke above this price level and created a higher high because this high is higher than this previous high. So when you see this change of structure, this break of structure, it resulted a price breaking up above this lower high to create a higher high. And now it's a breakout structure and it came back to retest. And we'll talk about retest in a moment here. Now we're waiting to see whether price is going to continue to the upside or continue to the downside. So price is currently here. So will price break above or will it break below and continue to the downside? As we can see here, it resulted in an imbalanced candle. It broke below and now it may come back up to retest this price level because we have activity going on here. Now we're waiting to see if whether or not that will happen. Will it retest for the continuation down or will it break above? Now, this is considered a breakout structure. Price broke above. And let's see here. Let's look at another example. When we look at this area here, this section right here, this is a good example of price breaking structure. You can look at the 1 hour to make it more clear. Price was on an uptrend. It was breaking structure. See here. Now, price was creating higher highs and higher lows. Higher highs and higher lows. Higher high. Higher high. Higher high. Higher high. Higher high. And each higher high was breaking above the last previous high. So when you see price breaking above to create a new higher high, it broke above structure. Kind of like stairs. You can look at this like a staircase, right? You're going up, right? You're going up the stairs, right? You're going up. You keep leveling up. So the same situation is happening here. This high broke above and created a higher high. It broke above this price level. It broke above this price level here to create a new level and create a new higher high. It created a new higher high and eventually came back down to retest and broke above again and create a new higher high. This high is higher than this previous high. It broke above this price level. It broke above structure to create a new higher high at this price. And same thing happening again and again. So this is an example of a breakout structure to the upside on an uptrend. So on an uptrend, if price breaks above the last higher high, it confirms a continuation of a bullish structure. In a downtrend, as we see here, draw it out here. On a downtrend, I can color this red. Price is now breaking below the last low. See, price left a gap here, came back up to fill it. But anyways, it created a lower, it went from higher high to now a lower high, to now a lower high, and then lower low, lower high, lower low, lower high, lower low. And it does not matter which time frame you use. On each time frame, whether it's a 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, 1 minute, you'll see breakup structures happening. We're just looking at a bigger scale right now. So does not matter the time frame. You can still spot breakup structures and retest. Here we're looking at the 1 hour. Lower low. So you can see here that price was breaking structure. It broke below this low to the downside and created a new lower low, and price eventually broke below from this previous low. Now this low is lower than this previous low. It broke below this price level to create a new lower low, and it came back to retest. It created a lower high around this price level and for the continuation to the downside. So here, it's an example of a breakup structure on a downtrend. If price breaks below the last lower low, it confirms a continuation of a bearish structure. You can see here the breakup structure of the last lower low. As you can see here, lower low. This is a lower low, broke below this last lower low to create a new lower low, confirming a breakup structure to the downside. It broke below this price level on a downtrend, and it continues to the downside. Now, this is an example of a break of structure. You can see here, price broke below this price level. It broke below this structure. It resulted in this bearish move to the downside. It resulted in this bearish move, broke below this line here, broke below to create a new lower low, and for the continuation to the downside. That is the difference between a break of structure from an uptrend to a break of structure to the downtrend. Now, break of structure shows that order flow is strong. The order flow, whether there's a buy or a sell, the order flow is so strong and the market is likely to continue in that direction. Now, let's look at a retest. What is a retest? So after there's a break of structure, price often pulls back, or AKA a retest, the broken level or zone. It retests back to that support level, that resistance level, or supply and demand zone before a continuation in that same direction. The retest gives traders a high probability entry since it confirms the breakout wasn't a fake move. So let's look at a retest on an uptrend. Now the retest here on the uptrend, we can see here. This higher high broke above. We actually delete this here and go Now this high broke above and it came back down to retest. You see here, came down to retest. Because it reacted around this price level and it bounced up. It reacted around this price level and it bounced up. It reacted around this price level and it bounced up. You see, this is an example of a retest. When you see these wicks hitting this price level, and it bounced up, that is a retest. And we see a lot of activity around this price level. You see how price broke above, came back down to retest. It broke below here, but it eventually came back up again. It broke above, and it came back down to retest, and to retest, and retest for the continuation to the upside. And we see another example here. Price broke above this level here. Price broke above, came back down to retest. Here, here, and here. So price broke above this level. It broke above this resistance and created a support. And now it went from resistance to now support on an uptrend, broke and went above, created a new higher high here. Same situation happening here. It broke above this structure, this price level, created a new higher high. It was like slightly consolidating here, but eventually broke above again to retest, retest, for the continuation to the upside. Price again broke above this higher high and broke above this higher high to retest. Came back to retest here, 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 here. So price broke above this price level, came back down to retest for the continuation to the upside. And the same thing happens again. Broke above this level, this higher high, came back down to retest for the continuation to the upside. And now we can also see it on the downtrend where price broke below this price level, below, came back up to retest for the continuation to the downside. Then price broke below this price level, created a new lower low, and came back up to retest. Here, price broke below this zone, this area, this level, came back down to retest for the continuation to the downside. And that's how you can spot a break of structure and retest. And these levels can be also used in the future. As you guys can see here, these past levels, price eventually came back up to retest these levels again. You can see it here. You can see it right here, here. See? Price retested here. This is for an uptrend. Price came back up to created a higher high here, broke above structure, created a new higher high, came back down to retest this previous high. So now it went from a downtrend to now an uptrend. It's a change of character. It went from a downtrend to now an uptrend and started to create new higher highs, higher high, higher high, higher high, higher high, and it broke above this higher high, broke above this higher high, came back down to retest this price level here. Came back to retest for the continuation to the upside. Why do they matter together? Why breakup structure and retest matters together? Well, the breakup structure is the direction. The direction leads to, it shows where the market is likely to be headed on the breakup structure. And on a retest, that is a potential entry point. It gives a safer, more precise spot to enter with better risk to reward. Now, just keep in mind, just because you see a retest does not necessarily mean that you want to enter right away. It just gives you a precise, it gives you an idea of where price could potentially retest. And there's other variables that you also got to implement before you execute any trade orders. You see a retest happening, but you also want to gather confirmation candles. And you also don't want to be in a situation where there's going to be a fake out happening. So that's why it's important to have have break of structure after break of structure, have a retest happening just to double confirm that there's no fake out happening in the markets. And I'll talk more about that when we discuss liquidity and confirmation candles. And but here, this is just a basic example of a break of structure and retest. And here you can see here when price broke above this level, it created a retest for the continuation to the upside. So here, yes, it's a potential entry point. However, you do not want to enter right away because you still have to gather more data. You still want to gather more confirmations and cover the rest of the steps in the playbook. So after we see a break of structure, you also want to look out for liquidity. And we'll talk more about that on our next call. And you see here, a break of structure happened. Okay, well, where do we see potential liquidity? We see liquidity here, here, here. We see liquidity here. So when you see previous, higher highs, higher lows, lower lows, lower highs, pivot points, those are also considered liquidity. So when we see a break of structure, we know that there's liquidity here. All this is liquidity, right? All these sell orders are liquidity. So price could potentially move up to wipe out all these liquidity orders, all these sell orders. So after this break of structure, we see liquidity here, right? We see money here. This is all money. Price could push up to wipe out all these liquidity orders. So this break of structure happened. This break of structure retest. It pushed up. And of course, it liquidated all these sellers. We'll talk more about that on our next call when we cover liquidity. So I hope you guys got some value here. You got an idea of a break of structure and retest. And just Remember, a break of structure signals a shift or a continuation in the trend, whether it's an uptrend or downtrend. In the retest, that confirms that the market revisits the broken area or the broken level, offering a confirmation and a potential entry. But just keep in mind, before you enter the entry, you want to gather more confirmations, more confluence before you take the trade with confidence. Now, that is the end of this video. It's very simple, very straightforward. And the more you practice this, the more you study this, you'll be able to spot the break of structures and retest. So I appreciate you guys for listening in, for watching, and stay tuned for more videos on this bootcamp series. Please like and subscribe, share this to anybody that will get some value, will benefit from this. So I appreciate you guys. I love you guys. I'll see you guys on the next one. God bless.